Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, January 25th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. What you hear or see here is for informational purposes only. Any allusions to being investment advice are strictly not accurate. I am not a financial advisor. I cannot give you financial advice. It's for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so we're going to get into a bunch of overvaluation porn this week. Starting here with, we've showed something similar before, but I liked this particular chart that I found. Why? Because it shows the in pink where we've had S&P 500 bear markets. And you will see that, first of all, go to the far right. This is the U.S. net capital inflows, basically foreign investors. Billions of dollars, 3-month moving average. You see, I mean, we're at unprecedented levels of foreign investment in the United States into stocks. Why? Because they go up, right? They're going up, so people want to make money. And so discussions about valuation and reasonableness of whether this can continue, this goes out the window. We are in full-blown bubblicious FOMO territory. And so everybody's in on it. And I'm not. This is why I didn't perform very well last year. I admit it. Um, but I am not going to buy stocks when these same tech stocks, AI stocks that everybody else is buying. There's no, it's you're standing on a trap door with a noose around your neck and you don't know when the trap door is going to open, or you're sitting on a bunch of dynamite with a fuse lit, but you don't know how long the fuse is. Now, I'm not suggesting there's going to be a crash. I'm not suggesting that this won't go higher. What I'm saying is the historical data that we have, the experience that we have in markets, is that when you're at this level of valuations, your forward returns over the 3, 5, and 10-year period are not good. And you risk a big drawdown, a drawdown being a loss in a year of 50% or more. This is how it is. And the thing that I think people have just been anesthetized to the risk. And I just don't see I mean, there's a lot of like retirement money in this for old people. These are people that are now in their late 60s, early 70s. I saw a graph the other day where a lot of these people are in stocks, right? That they shouldn't be in. There's stocks out there that are reasonably valued. There's other opportunities around the world. There's cheap things. But this isn't what people want. People, again, chase the shiny object. And you can see going back to the pink areas, shaded pink, where you've had bear markets, and you see what happens. When the bear market starts and stocks go down, the money will leave. And so this is going, everything's going to be fine until it's not fine. And so I'm not a perma bear or perma bull. I'm bullish on, as I've stated before, and even in the newsletter, several areas around the world that are cheap and I think are going through, turnarounds. And we're doing actually well there. But this is not, uh, you know, the other problem is how are these people analyzing? I mean, most of these people are just in ETFs or an S&P 500 fund. And so it's all skewed to the market capitalization, the index is. So it's all these tech stocks. And so how many people actually understand the amount of overvaluation? They understand, what their risk levels is. They don't. And so it's going up, so why ask questions? So I think this is going, when this reverses, you see it has reversed before, like when we had the pandemic situation, then came right back. We've had a couple of these um, periods recently where you get a lot of volatility in money. And this is kind of like how an emerging market works, right? With capital flows surging in, then surging out. So eventually we will have a bear market. It'll probably be very severe. and a lot of these things will reverse, but we'll see. I just think that I just don't want to pick up dimes in front of steamrollers. Here's some more contrary indicators. Insiders are not betting on a rally. Percent of publicly traded corporations experiencing net buying from corporate officers and directors. It's the lowest level in at least a decade. Okay. Um, they are not buying their own stock, and they know the businesses better than anyone. And they're not buying because, for many reasons. You could say in an individual case, well, somebody's not buying because they have to pay a tax bill or they got to pay for a new house in Aspen. I don't know. But when you look at it collectively, this is not a positive indicator. This is a negative indicator, a contrarian indicator, because valuations are too high. And so here's a chart that shows small speculators, U.S. equity allocation, 1 year moving average. I mean, this goes back to 89. This is the last um, COT reports. This is basically futures, right? And small speculators, which they call the dumb money in futures trading, they're all in on U.S. stocks, right? This is crazy. This is off. When you see things that are this far out of the norm, I mean, you have to take notice, don't you? And this isn't my term. This is what people in the futures market call small speculators, the dumb money. They're always on the wrong side of these trades at the inflection points. When you see something, you look at something that has 30 something years of data and you see, okay, there's a range here. And then you see it skewed so much to one side. I think you really have to take note of that. I'm not just cherry picking one indicator. There's many, many indicators that are showing this record overvaluation. So here's a tweet that somebody I follow on X. The United States is 4% of global population, 25% of world GDP, yet 70% of global equity capitalization. So you might have heard me make a comment a few weeks before, or maybe a couple months ago. I said, you're better off just buying a world index fund. You have to be careful doing that, though. You might have to build your own ETF by using some, country or region ETFs, because what happens if you just buy a world ETF? Everybody tries to find a way to get into what's working, and it's these U.S. tech stocks. Okay, these Mag 7 stocks. And so, we have 25% of the world's GDP. I know it's morning in America. We've shown both sides of that. Mark Andreessen's positive, other people are positive, the market's positive, Wall Street's positive. But, I tried to identify the other side of the argument of all the challenges that are going into this new morning in America. And we'll begin to see those as we go forward. I don't think that when your economy is 25% of the world's GDP, you're way skewed when you're 70% of global equity capitalization. Well, the argument could come back and say, well, what do you want me to do, John? Put money in China or Europe? Well, I think there's opportunities in China at the periphery. I think there's opportunities in other places around the world, not necessarily Europe. I mean, I've talked about this whole Western hemisphere seems to be changing. Latin America, South America has a lot of opportunity in my because I think there's going to be political change that's going to cause a re-rating in many of these countries in South America. So that's an opportunity. I think there's opportunity in certain countries in Central Asia, and in the periphery, the old Silk Road, if you will. Take a look at that. So I do think that there's opportunities in various places, and the valuations are a lot more reasonable. And again, just putting your money into an S&P fund without knowing what the stocks, what are how these funds work and what the valuations are, I think is just, naive at best and crazy at worst. This is way out of whack. This is skewed. Let me go back to this. The argument from the bulls will be, well, the U.S. is the best thing going. It's morning in America, and everybody's gonna we're just gonna leave everybody in our dust. That very well could happen. But isn't that priced in already? Aren't those expectations priced in? That's the point I'm trying to make here. All those things are priced in. And so then you have to exceed those expectations to make the market move higher. And I just don't I think the risk to underachieving is a lot higher than overachieving. It's a so-called Buffett indicator. This is the ratio of total market cap to US GDP. I think he mentioned this once. I'm not sure. This isn't his main indicator, but this is what they call it because I think he mentioned it in an interview in sometime, 15, 20 years ago. But I think it's a good proxy because you have your 20-year average ratio. Again, it's at 120, the market cap being 120% of GDP. And then you've seen since basically the great financial crisis and all of the money printing that went on since then, you've seen this big move higher over the last, going on 15, 16 years now or longer. And we're at record valuations. We're at 207%. Total market cap is 207% of GDP. So again, you're way out. You're way out of the norm. And this is just ripe for being and you see here, I think a lot of it, I think something interesting here. Look at this blue is the GDP plus total assets of the Fed. The Fed's balance sheet going up. This is another thing we have to keep into consideration. If we get into a debt crisis, um, and the Fed's forced to print money, go back into QE, stocks could continue higher. Look at what happened in Zimbabwe, Venezuela, Weimar Germany. Stock markets went up because people will pile in, mostly because all this liquidity, and then they realize that there's the currency's under attack by the central bank being devalued, and they'll try to put money in any kind of hard asset. But I think gold, I think, Bitcoin is going to thrive in those environments. But we know what's been fueling this. People say, well, there was never, we had all this QE and there was really never any price inflation except for, right after the pandemic. No, we had asset inflation. This is why I talk about the Cantillon effect. Whoever's closest to the money printer wins. Here's another S&P is at all-time peaks in valuation. You see what happened at prior peaks of valuation. It seems to, you know, you eventually have a correction. This thing cannot, we are not in a new era. There's nothing new under the sun, as Solomon said. And I've been around in these markets and studied, I've experienced these markets for, going on 35, 40 years, and I have seen this before. For some people, it just is not going to register for most people that are involved. Because if you understood these things, you would take down your, money and you would, look for undervalue. But that's not how people operate. People are like walleye and they just respond to the stimulus, and the FOMO and the shiny object. Whatever's hot, that's what they're in. And that does work for some folks. I know there's people out there that are traders that they're very successful. Okay. But that's not the average person. That's not you listening to this for the most part. And because you caught the liquidity wave and you're in the right place at the right time over the last couple of years, doesn't make you a great investor. Can you do that over an investing career? That's the question. Or will you give it all back? Because we see story after story about the one-hit wonder that comes along and makes all this money in a bull market and then goes away and we never hear or see from them again. Okay. And it's just rinse and repeat through these cycles. Being able to build wealth through decades is the trick. If you can build, if you make your bundle and then walk away and retire, like I've said before, Allah be with you. But don't come on and say you're a great investor because you're riding a liquidity wave and you're in the right place at the right time. I want to see it over a long period of time. And that's like 10 years minimum, 5 to 10 years minimum through a complete market cycle. So talking about the economy, this previous administration basically just juiced the economy with, you know, put us in a lot of debt. All these previous administrations have done the same thing. Uh, um, but you see, basically, government healthcare spending are what's propping up, or I call it sick care spending, because the healthcare industry is a joke. I mean, I'm not going to get into all that. We've talked about it enough. Hopefully, that's going to change slowly but surely. But, healthcare spending and government spending, I mean, they just went nuts with the government spending in the last, year leading up to this election. And it's not going to change. I really don't care what anybody says. That being naive and saying you're going to cut 2 trillion. I mean, you have to go over entitlements. You have to talk about entitlements, and no one's interested in talking about that. It's just that simple. It's not going to happen. You're going to continue accumulating debt until you have a debt crisis, which will lead to a currency crisis. Then, after you have the currency crisis and everybody's impoverished and everybody's smashed against a brick wall, then they will be open for discussions about doing it because there'll be no other choice at that point. That's the inevitability of the United States. When does that happen? No telling. I can't, there's no way to know. But you better have that in the back of your head because that's what we're heading. We're on like a crash test dummy. We just don't know how long the lane is here before we hit the brick wall. You're not going to be able to continue to run deficits of 6 and 7% with your economy growing at 3%, and at some point not have a sovereign debt crisis, which will inevitably lead to a currency crisis as the central bank tries to just buy all the debt. It's just not gonna happen that way. And so, that's why gold has outperformed for the last, 20 years. And the United States is not the only country in the whole Western world, the whole rules-based post-World War II rules-based international order, which is basically the United States, Canada, Western Europe, Australia, New Zealand, Japan. Here's another great statistic. Home buying conditions the worst in 65 years. Look at this. No one's buying houses. They're too expensive and the rates are too high. So here you go. Buying conditions for housing as surveyed by consumers. Buying conditions equal share reporting good conditions minus share reporting bad conditions. Here it is. Bureau of Economic Research, University of Michigan, Federal Reserve Board, and Bravos Research. Here you go. Typically, you're in a recession. I mean, housing is such a large part of the U.S. economy. So you have housing in the funk. You have manufacturing's been in a recession now for like 2.5 years. And so services is carrying it and government spending and, services being in healthcare. That's what your economy is. And defense spending, I guess. Is that going to continue forever? I don't think so. Not when you're talking about cutting all this budgets. It's you, you're knocking out, you're starting, it's like a Jenga, right? You start pulling out the blocks and you're going to have a collapse. Now, the problem, like I've said before, is that the morning in America is going to get dissipated real quick, in my opinion, because I think the bet is we can get this AI thing going and that's going to be the next big thing. And hopefully that will create enough economic activity to compensate for what we need to do to get things realigned. And I'm not sure that's going to happen because there's constraints there also. So BlackRock, I really don't like this Larry Fink person. He's really a sleaze bag. But he's controlling a lot of assets, and so it pays attention to, they have a lot of smart people working there. So this is the guy though that was big on renewables because anywhere this guy can, anytime he smells a profit, he comes out of the ground. So this is BlackRock says AI data center growth is heavily powered by 24/7 natural gas. This is off of a tweet on X. Here's the quote. BlackRock CEO Fink on powering AI in the US. Quote, but in the short term, let's be clear, it's going to be heavily powered by gas, natural gas in the US. It will be supplemented by renewables. I don't agree with that last statement. That's just his bias, I think, because they have so much money in renewables. It's going to be natural gas for a while, and then eventually nuclear as nuclear ramps up, because that is the what's happening around the world. It's the biggest growth energy in energy. It's going to be the transition to nuclear that's happening around the world. It says dirty little secret revealed, BlackRock's first specific using the word natural gas instead of low carbon to power AI. It's interesting since Mr. Trump got elected. Now, good things are happening, since Mr. Trump got elected. Again, I'm not credit where credit is due, and like I said, I'm hopeful that everything that he wants to do goes through for the most part, but I'm skeptical. But around this, uh, you know, natural gas and things like that. Now all these corporate uh, people like Fink and these other people, they don't have to go down and bow down to the renewable net zero thing. You're seeing so many banks get out of that consortium of net zero because they never really were into any of this stuff. They just did it to go along, get along, to curry favor with the political class because they were afraid of the political class. You didn't would you want to be the one bank out there, the one big money center bank that didn't have a DEI department? You would have got skewered on social media. And then, of course, the previous administration had a whole cohort of sub low IQ morons running these DEI departments, and they would have brought all kinds of charges. So it's easier just to hire a bunch of morons, create the department, and call it good. Now they don't have to do it, and they're shedding. They're like snakes. They're just shedding the skin. So this might sound harsh or cynical, but that's exactly what happens. They're being laid off and axed all over the place. These are people that can't get a job anywhere else. Okay. They're ridiculous people, low IQ. They're just not productive people. If they were, they wouldn't be in DEI. And you're just seeing them getting fired all over the place. That's something that Trump's even done in the federal government in the last week. I mean, they were getting rid of people left and right. They're crying all over X. But it's the same thing with energy. I mean, BlackRock was into it because all the subsidies, there was trillions of dollars. I talked about it before. The renewable subsidies under the Inflation Reduction Act for solar, for example, there was no sunset on them as far as I know, and they were unlimited. So as fast as you could throw that junk into the ground, you were making money. And I saw it. I was in that business. I saw what they were doing. And I saw the cheesy, cheap, fly-by-night operators that are running around in that industry. And that's not everybody. There's some legit people out there doing this, but it's full of just a bunch of, you know, carpetbaggers that were there for the luz and for the free money. I mean, I saw things I don't even want to get into. Unsafe, lack of just get it in the ground and get it running. That's what I was told many times. I said, well, don't you want to do this right? The last company I worked for, I had to call OSHA on my own company. Okay. And they were brought out and, the general contractor got cited. Of course, that made me persona non grata, but, you know, that's how bad it was. I mean, carnies hooking up rides do a better job than some of these clowns that are running around. And so this guy like this, he's just going to shed the renewable skin and move on to, the natural gas situation. As a matter of fact, this is not an investment, but if you want to go listen to what's going on with gas turbines, I mean, go listen to GE Verona had their earnings call last week, and it was very positive. The orders for gas turbines continue to increase. Again, that's not uh, an investment recommendation, but I keep my finger on the pulse. Eaton will be next week. They sell a lot of electrical gear, load centers, transformers, all that stuff, right? And I suspect that they're going to be, reporting good earnings. There's another company that I found that I wish I would have found 6 months ago or a year. I think it's called Solaris Energy something. Anyways, they're doing a lot of these skid mounted solutions for these data centers with the gas turbines. That stock is up 300% just over the last year, I think. So there's going to be opportunity here. Again, you're going to be limited though. They're talking about, I think I saw a stat somewhere going back to this AI power needs somewhere for global AI just between now and like 2030, I believe is what it was. Let's just say it's over the next 10 years. It's like, 300 300,000 megawatts, something like that, 300 gigs or something crazy like that. I mean, the industry is just not going to be set up to manufacture all that equipment. I mean, they can spin it up and spool it up, but that's going to be a limiting factor. Um, the electrical components that you need to build substations and distribution, you still have to do that even if you're not connected to the grid, right? You still have to have load centers and all these things. And we'll see if the industry can, there's going to be a lot of opportunity. And then, as they bring back these nuclear plants, talking about that later on in the video. So there's going to be a lot of opportunity out there, but I'm kind of wondering if it's actually, again, we have to be careful about compound annual growth rates, linear extrapolations into the future. Remember what happened with electric vehicles. People were extrapolating electric vehicle sales for the next 10 years and was, this chart that went from the lower left to the upper right, and then it didn't really materialize. So it kind of put the wet blanket on copper demand, cobalt demand, battery demand. Doesn't mean it goes away, but some of the assumptions were incorrect. And so you have to be careful. Again, I think that this AI stuff's going to run into a lot of pushback. Um, I just don't think that, not only that, the ISOs that control the electrical grid are simply not going to allow it. I mean, I showed the chart last week where you're talking about just here in ERCOT, which is Texas, Electric Reliability Council of Texas. Uh, you're talking about going from max peak demand of somewhere around 85 to 90 thousand megawatts to 140 or 150,000 megawatts by 2030. How? You know how many plants that is? I guess anything's possible, but does GE and Siemens and Mitsubishi and Solar, do they have the manufacturing capability to make all the turbines? Does all of the Schneider and Eaton and all these folks have the manufacturing capability and technical support? Because it's not like you just, ship a heavy gas turbine from GE and it goes to the field and you wash your hands. You have to send engineers out there, technicians. You got to get it up and running. It takes time, and these people are not in, these people are qualified people are in short supply. And so if you start affecting retail rates, you're going to get a lot of pushback politically if all the power is being sucked up by AI. What's that mean? So we're going to see, that's why I think that I was talking about Solaris has done so well over the last year because they can do something, provide turbines like something like Musk did in Memphis with his Colossus site, where he just brought in the skid mounted gas turbines. But are you going to be able to get away with that in every jurisdiction? Probably not. So again, don't just be cautious of, compound annual growth rates and visions of sugar plums, with charts going by consulting firms from the lower left to the upper right. You have to be careful of that. You have to pay attention. You can't just assume that that's going to happen because we've seen time and time again that that's not the case. Now, I do think that AI is going to continue to grow, but I just don't know at the rates because I think it's going to be constrained by several factors, including natural gas supply. I mean, remember, you're building all these LNG export terminals also, okay? And there is a possibility that, maybe some of these basins may be reaching some type of plateau. If that's the case, then that's going to be a problem. Especially, one of the factors that a lot of people are saying, well, we have cheap natural gas here relative to the rest of the world. That's absolutely true now. But now that Mr. Trump's in, he's going to let them build all these LNG export facilities. So that's why people want to do. That's what, capitalism does. It's looking and saying, well, I can sell this LNG for 14, $15 an MCF in overseas. I can buy it here for two, three or four, but you're putting more and more strain. So if demand keeps going up and supply is plateauing, which is not outside the realm of possibility. This idea that we just have this unlimited supply of resources that's going to last forever is stupid. It's not true. Basins peak. Again, you can get to a level of price where it will incentivize people to go out, but you're just going to expedite the decline, the eventual decline. So a lot of things to keep in mind. Don't just think, well, AI, man, it's going to change the world. How do I get in? You really need to think about, I think energy is the way to play it. And I think that you have to think it through, though, and really pick your spots. And that's why I think in the end, nuclear ends up being the solution for the world. And that's why it's a multi-decade opportunity. But I do agree that natural gas, in the short run, is going to, be a solution. So this is, again, here we go. Oh, my charts are getting messed up here. Just hold on. My computer's freezing here for some reason. Oh, here we go. So talking about natural gas, this is exactly what I'm talking about. Natural gas demand forecast 2024. You see LNG exports, Mexico exports, AI data center, crypto EVs. Okay. And so you see this 105% growth or 29 billion cubic feet per day between, basically 2024 to 2030. Okay. So you see where the assumed growth is coming from. You see LNG, how it's moving higher, okay, over time. Every year it's going to go up. Mexico exports stay pretty relatively, static, but you see the um, AI demand, okay? And so we'll see if this happens. Again, like to be, this is, people see this and they go, wow, I'm going to go long natural gas. Okay, is this really going to happen? What's going to happen to the price if we're exporting more to capture that arbitrage I talked about opportunity in the differential in world prices? And then what's that do to, the cost of these AI centers, the power that goes to them, or your retail to run your air conditioner and your appliances? The public utility commissions are not going to allow retail prices to go up because these are all political pain points and would lead to more inflation. So this is positive, but again, you just can't look at this and then get visions of sugar plums. You have to be realistic, as we've seen these kind of CAGRs or these assumptions about long-term growth and in various things not pan out. So let's talk about gold. I put as the title of this slide, no one cares about gold. That is good for us. This is a guy follow on X. Here's what it says. The tweet, New York spot gold is now 100% above our average all-in sustaining cost of producing gold miners. Amazingly, the mining ETFs had redemptions yesterday. That's talking about Friday. We calculate the most popular ETF has had $290 million in redemptions year to date after $2 billion in redemptions last year. Not sure selling companies with 50% pre-tax operating margins is a successful long-term strategy. Past underperformance of miners versus gold does not guarantee future underperformance of miners versus gold. Look, it's very simple what's happening here. Um, Mag 7's in, AI's in, Morning in America's in, optimism in the equity market, specifically the S&P 500 and the Mag 7 is, as we've shown, sentiment is off the charts. It sucked all the oxygen out of the room. No one cares about gold and gold mining stocks. That's your opportunity. If you want to know what the Actionable Intelligence Alert newsletter is about, that's what we're about. This is an opportunity. Okay? 50% pre-tax margins. And I'm not talking about going out and buying a bunch of crappy juniors on the Vancouver exchange. I'm talking about buying large cap mining companies that pay dividends that are having exploding cash flows. Okay. There's no reason to go dumpster diving when you can get prime assets for basically the cheapest they've been in decades. Okay. So that's my advice. If you are interested in buying undervalued securities, this is an opportunity. Inside that opportunity, most people fixate on these junior companies and the vision. I want to put 1,000 into XYZ gold mining development company, and it's going to go from 1,000 to 100,000. Okay, not going to happen. Just buy, you know, just buy a company that's a large cap that's doing very well. I've mentioned them before. I have some in the Actionable Intelligence Alert newsletter. They're out there. Do your if you can't figure it out, Fred Hickey, follow him on X. He talks about this. Listen to his interviews. He writes the high tech strategist. He talks about tech stocks, but he also talks about gold mining stocks. He's been very prescient. He follows this. I mean, again, I'm a general investor, but I can see, when somebody hits me upside the head with an obvious situation. I mean, this is where you need to be if you're interested in undervalued securities. I think that gold mining stocks are basically where uranium stocks were, you know, 5 years ago. Nobody cares about it. No one's interested in them, and they're super cheap. And you're talking about gold, which has all of these potential tailwinds behind it. And it just made, again, an all-time weekly close, all-time high last week, and no one cares. Again, the reason no one cares is because it, every all the attention and all of the money is focused on AI and the Mag 7. It's just that simple. And then when that reverses, these things are going to explode. When is that going to happen? Couldn't tell you. But every day that goes by, we're getting closer to that inflection. Here's something from Scotiabank. Gold equities are generationally cheap. Gold equities have rarely been this cheap in the past 40 years. So you have gold making highs, all-time highs. You have foreign central banks buying gold hand over fist. You have the equities, gold mining stocks at generational lows. This is how you create generational wealth, in my opinion. Okay. And so it's not for everybody. Again, you don't have to go onto the Vancouver Exchange and buy moose pasture in Saskatchewan. Why would you do that? Buy the top trophy assets companies out there. There's a good three or four or five of them. Okay. And, that have great properties, great managements, and are, translating these high gold prices into substantial cash flows and returning cash to shareholders. Okay, you just have to wait. You have to have patience. So, this is probably has moved gold mining stocks and to a lesser extent silver, but silver's a little bit of a different animal. And if you really want to get cute, if you really want to know what's undervalued, platinum is, really cheap relative to gold. Okay, it's at decades undervalued. I've made it no secret. I've been accumulating platinum, physical platinum. Not hard to do, cheap. And that doesn't mean you just go out and buy the platinum stocks. You don't need to do that right now. Wait till we get a breakout. Wait till we get an established uptrend in the metal. Then we can venture into the platinum and palladium stocks. There's no reason to do that. Just buy the metal. People don't want to do that. They want to go out. What's the junior that I can put 1,000 in and, not know anything about anything, and it will go to, 10,000 or 100,000. That's not the game. So, if you agree that selling overvaluation and buying selling overvaluation and buying undervaluation is the key to long-term success, which is what I believe, and you are able to control your emotions and be patient, then I think that this is a tremendous opportunity. Again, here's the off X gold highest weekly close ever underscores strong momentum. I mean, we broke out, guys, last year, right? Early in 2024. We're in an established uptrend in gold. The tailwinds behind it, we've talked about it before, why gold's going to move higher. Um, it's doing that. It's not going to do it in your time frame. You just have to be patient, okay? And, eventually, typically, if you look historically, gold gets a lot of attention when the equity market is struggling or in a bear market. And that's just not the situation now. And that's your opportunity. That's your chance, okay, to go back and do some homework and look at previous bear markets in the equity market and what gold stocks did, okay, or what gold did during that time, what value stocks did during that time, okay, what other commodities stocks did at that time. These are things typically, historically, inverse to each other. So that's your opportunity. Do you have the patience? Again, I can't tell you when it's going to reverse. Can the Mag 7 stocks double again? Why not? I mean, at one point, Japan was at like a cape of like a cyclically adjusted PE ratio of like 70 or 80. That's double from what we're at now. Can it get that stupid? Yes, it has in the past. Will it? I don't know. But I do know that eventually something will come along and blow it up. And when the selling starts, you have just so much hot money in there. So many people are going to panic out. And then where's the money going to go? And typically, what it does, you don't need all of that money to come into these small markets. You just, again, to use a metaphor that, or what I've heard somebody like Doug Casey say, when you get there's no market like a gold bull market, okay? Unless it's a uranium bull market, but that's another story. But historically, that's been the case, and fortunes have been created. Now, these things are not buy and hold situations. We're in a period where, again, I just talked about it. Some of these companies have 50% operating margins because there's sustaining costs, all in sustaining costs. That's all in cost. You got to focus on that, not just cash costs. Is 1,200, 1,300, $1,400 an ounce, and the gold price or maybe even higher, $1,500 an ounce. And their costs are going up, obviously, but the price of gold's going up faster. Gold was up almost 30, I think 30% last year, or slightly under it. Okay, and so their margins are expanding. That's 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 the secret sauce of these companies. That the gold mining companies are leveraged to the gold price. So, maybe gold sells off. I don't know, but I think we're in an established gold bull market that's going to last for a while. We've had a breakout. Again, these things have a tendency not to do anything, and then all of a sudden they go on runs, and then they go dormant for a while, and then the interest leaves the industry, and then comes back. So again, I'm very bullish on gold. I think it probably has the best upside right now. The gold stocks do. Uh, Far more than even uranium stocks at this point. So here's NextEra. This is a big utility. It's one of the largest utilities in the U.S. They used to be the FP&L, Florida Power and Light. Says NextEra, they're big in renewables. Says NextEra takes step to restart nuclear plant as AI demand soars. We've talked about this before. Here's another plant. This one's in Iowa. I believe it's the Duane Arnold plant. It says request to U.S. regulator is first move toward potential revival. Surging power use has reawakened interest in nuclear energy. We've talked about this for a long time. NextEra has said Duane Arnold uses less complex technology that may make it easier to revive than newer nuclear plants. Okay, so again, this isn't single-handedly going to do anything really. But this is, again, the news is at the margin. It's cumulative, right? Here's BHP. You don't have the Olympic Dam mine in Australia, and they announced that their uranium is produced as a byproduct at that mine. It's not the primary, uh, the commodity that's mined at that mine. So when they get the uranium that they get as a byproduct, I believe, BHP doesn't really sign any long-term contracts. I believe they just sell it in the spot market. So it says BHP uranium production is down 23% year over year for 6 months ended December. On a full calendar year basis, production is lower by 900,000 pounds. So you have, basically another million pounds of supply that didn't come into the market in an already undersupplied market. This is the money shot right here. Is there anyone that can increase production sustainably? That's the question, right? We've talked about that in the past too. We have this growing demand for nuclear power around the world. Um, Uranium fuel that needs to be supplied, and we've just seen disappointment after disappointment by most of the mining companies. And so that inventories get run down, these deficits continue, they're cumulative, and you're adding more demand, bringing back idled reactors, new reactors being built. The whole view about SMRs, I'm not even incorporating that into the demand yet, but all of this positive energy around it. And, you've already seen what's happened with conversion prices and enrichment prices. They're making all-time highs or recent highs, I should say. And, it's inevitable what's going to happen here. So again, do I think that there's upside? Yes. Do I think it's the same as it was 5 years ago? No. But I think again, you have to pick your spots, and we just keep seeing more disappointment. Now, the positive thing is the Trump administration, again, to give credit where credit's due, and I have to give a certain amount of credit to the Biden administration. They started this trend, but this started under the Biden administration, is to put funds towards this. Palisades got money. I think this Dwayne Arnold's probably going to get some money from the federal government to restart things like that, right? And, this whole Stargate thing, I don't even want to get into that right now, but, the new energy secretary gets it, okay? And I think that one of the things that I did see announced in one of the executive orders, if I'm not mistaken, or at least there's some discussion, was around the inevitability or the desire by the Trump administration to streamline the NRC and get the bureaucracy, down, so we can get this thing moving, right? And I'm now starting to see more and more people talk about this possibility of building out the nuclear fleet in our nuclear industry here in the U.S. as akin to or analogous to the interstate highway system built out by the Eisenhower administration. I've heard other people say that now. That's starting to gain traction, and the discussion around how that can be the spillover effects of doing that. Again, building, what I've said, come out and say it. We're going to, the energy secretary and Trump, they should get this blue ribbon panel together in DC with a lot of press on it. We're going to build 100 of these 1,000 megawatt reactors, blah, blah, blah. Here's what we're going to do around permitting. Here's what we're going to do about support. Here's what we're going to do about fuel. Here's what we're going to do. And, you would have an explosion of activity. Okay. Public-private partnerships with these AI companies that have billions of dollars. Okay. And, I think you would have an explosion of economic activity. We need to regain that lead in that industry that we pioneered and we let die on the vine, i.e., the nuclear power industry. Will it happen? Well, I'm hopeful we'll see. We're only a week into this administration. So here we go. Japan restarted 2 reactors in 2024, 2 more planned to restart in 2025, and one in 2026. This is from the EIA. It shows you how this has been. This is actually one of those keggers that's actually worked. I mean, it's taken a lot longer than I think a lot of people have thought about the Japanese restarts, but it's happened because they had no choice, right? They had to do this. They're 100% dependent on imported energy. And so this is economical and makes sense. I mean, after the Fukushima Daiichi accident, they had to take a pause of a few years to get their regulatory authority under control and do the engineering reviews and site reviews to make sure that these things were safe. So I think in the long run, it's probably beneficial for the industry, but again, these are coming back now. More demand incrementally. So this was a Bloomberg headline. Obviously, I'm not going to sign up for Bloomberg, so I'm just giving you the headline. We talked about this in the past, but I just want to let you know that this is out there. I'm bullish on Argentina. I'm bullish on the rest of South America, especially as we're going to have some elections down there within the next year or so. I've been talking about Colombia ad nauseum, and I'm starting to see some of the Colombian stocks now break out. That's interesting. Again, that goes back to what Druckenmiller said, right? Um, don't look at things, right now when you're looking at, equities or stock or investments. Look out a year, 18 months, 2 years, and determine where you think things are going to be. I've suggested that we're going to see some changes in government from these left-wing governments to more center or center-right governments, and that could change the perception. That could lead to the adoption of more market-friendly uh, uh, economic policies, which will then be perceived as positive by the market. And the logic then would be that these stocks would, or these countries would draw in more capital. Now, uh, I'm not the brightest bulb. Okay, I'm not. A lot of people are going to figure this out if you wait till the actual election results. In Colombia or Chile, these stocks are already going to move by then, as it becomes apparent that the incumbents are just not going. I mean, they have approval ratings in the 20s. They're not going to get reelected. It's just a matter of then understanding who is most likely to get reelected. But then again, does it matter as long as it's not another left-wing stoop? Again, it'll be a perception change of going from bad to less bad or from bad to even good. And again, those kind of moves, as you saw in Argentina when Malay came in. I'm not suggesting these other countries are going to go through the same transformation. They don't have to. But as you saw, when something goes from bad to less bad and now it's starting to transition to good, you're seeing the activity, you're seeing the interest, and you're seeing the money flow in. And so here's the article from Bloomberg. Shale spurs Argentina's largest energy trade surplus since 2006. We've talked about this. It's a vaca muerta. They're taking all restrictions off. The policies that they've implemented are letting this thing flourish now. Again, think that this is kind of like, Permian and Eagleford together, Permian, Eagleford, and Bakken together. I mean, this is in an economy the size of Argentina, it's going to have an outsized effect on the economy. Again, I've talked about this before. This is one of the reasons why Thatcher was so successful, because the UK North Sea oil and gas ramped up during her initial administration and was a very, very positive for the UK's finances. Same thing's going to happen here in Argentina. So it says shale spurs Argentina's largest energy trade surplus since 2006. Oil and gas boom helps 2024 exports beat imports by 5.7 billion. So they had a positive trade surplus, and they see the trade balance hitting 7 billion in 2025. And so it's going to be constrained a little bit because there's infrastructure that needs to be put in, but that's coming now as people are going to loosen their wallets as they see that we have an election coming up in Argentina too, I believe, in the summer, in the Congress. And so if Malay is able to uh, translate this better economic results into more seats in the parliament, in the Congress, then that will help with the additional reforms. So we'll see. Um, but so far, so good. So I wanted to show this. I'm not going to get into like going and trying to cherry pick higher prices. What I'm trying to look at is the Trump administration has one of the main reasons they got elected was to deal with the rising cost of living for the average schmo out there. And they made a lot of promises. And so you're going to see the media and the Democrats are going to focus on these things because whether Trump likes it or not, he has a small window of opportunity to say, blame the previous administration, but at some point you're going to have to wear it. And people want to see results. And so we have, egg prices at record highs. When you see like egg, milk, or bread prices, that's going to be a headline in the, USA Today and on MSNBC and these places. And when he gets interviewed, people are going to be, reporters are going to be throwing these zingers at him. Well, you said you're going to bring inflation down, but gasoline prices, but egg prices, what have you. Okay. The guy's not an emperor. He can't just do whatever he wants. So this is worth watching because, uh, again, I'm not going to sit here and report cherry-picked, prices for various things that go up. I'm just pointing out to you that this is part of the danger to the Morning in America theme. Got to get this under control. And, I think I'm not sure that this energy thing is going to work out like they think. And that was one of their main pillars to get prices down. Again, there's more discussion now about, okay, everybody's talking about drill, baby, drill, but again, the companies that actually produce are not incentivized to do that. Now he's already opened up a bunch of land and stuff like that. They can deregulate, they can do things like that as fast as they can. But again, that takes time to kick in. Okay. And we'll see. Do I think that that leads to, eventual higher production down the road or cheaper production? Yeah, these things are, again, no single event's going to do it. But again, as was reported last week, I mean, frac crews are down in the Permian, drilling rigs are down in the Permian, production is down in the Permian. That's not what, we're looking at. And so then, you have this discussion. This is where I get concerned because I'm wondering if it's just a negotiating tactic or if Trump and his administration really don't know these things. Saying, well, Saudi Arabia needs to increase production. Why would they do that? Again, that's going to cause oil prices to go down. Why is that? This is like kind of game theory. What incentive is there? Well, we're going to give security guarantees to Saudi Arabia. What's that mean? Okay. I mean, pretty much, that's not what's going to happen. There's already been a rapprochement with Iran and Saudi Arabia on their own terms. So I'm not sure that, and you have, MSB or MES, I mean, is trying to build this $500 billion, city in the desert and do all this, build out all this industry and mining and try to turn Saudi Arabia into this big Dubai. That costs a lot of money, and they need high oil price, relatively high oil prices for that. So having the oil price go down to 55 or $50 a barrel doesn't. No one's incentivized to see that except for Trump. Okay, and I'm not sure he's going to get what he wants on that. The only way I think you get low oil prices is by having a worldwide recession, and I think oil prices could come off then. But I mean, I'm not sure that that's going to be the case. And so if that's the only way they're going to get prices down, now they could deregulate the economy and things like that. Again, that takes time. Do you have time? No, you have congressional elections in, 2 years. And so historically, that means a Democratic House at least. And what happens then? Any kind of legislation, anything you want to do is going to get, stymied. So again, I'm not suggesting we won't have morning in America. I'm not. I just. I think the problems are so big now. If a lot of this stuff would have been implemented in the first administration, if he would have came in like this, maybe you would have had a shot. But I don't know if it can be done now. We'll see. And this is what people are going to focus on in the media. They are going to cherry pick and zing at these press conferences. Hey, food prices are up. Hey, you said you were going to get energy prices down. They're actually, have went up or what have you. That's going to be a problem, and especially if natural gas starts going up with all this AI. See, there's always going to be these trade-offs. It's not just, you know, so we'll have to wait and see what happens. Okay, this would be the time where I'm going to get into some of the political commentary. I know many of you don't care for that, so there'll be a short pause while you disconnect to spare yourself of my opinions, and then we'll resume. Okay, so one of the things I think that I'm starting to see, which is I'm finding interesting, And I don't know if it's planned by the Trump administration or if he's just flying off the cuff. There's been a lot of, Trump is a master at manipulating the media and getting attention on things and getting free publicity and bringing focus to a thing that he wants to talk about. And so there's been this discussion basically in the recent weeks about Greenland, and we're going to buy Greenland and we're going to take Greenland over. And everybody's freaking out, in the media. And they're like, this Trump guy's a nut. He's not really a nut, though. He just does these kind of things because he knows how to manipulate the media and get attention on something. And so Greenland uh, is a very prospective place for many reasons. And you also remember hearing in the last week or so, a couple of weeks, where Trump was talking about the Panama Canal. Okay. I'm wondering if the focus of this administration, obviously, they want to disassociate from Europe. I can tell that. Supposedly to ramp up, because China is our new enemy. But I'm wondering if a part of that policy, part of the other policy, foreign policy prescription, is to create this huge Western hemispheric bloc, if you will, because Trump's had a lot of discussions with Malay. He's talked about this Greenland. He's talked about making Canada the 51st state, which ticked everybody off up there, but it gets the conversation started, okay? And you start wondering yourself, what's the upside of doing something like that, okay? What if you could get this more, you know, huge market with huge resources and it's easier to defend and we don't have to be, over here in, some oblast in Eastern Europe trying to, let's just get out of that. And that, so going back to him talking about Greenland, just because he makes bombastic things, people say this guy's a fool, and the media just falls into this stuff. They're the fools. So I'm curious if there's a policy that's being articulated or formulated in the Trump administration to create more of this Western hemispheric hegemon, if you will, that encompasses all the way from Canada, Greenland, all the way down to, Tierra del Fuego and everything in between. Uh, what a tremendous amount of resources you have, the economic block that you may be able to create. Uh, and so, you know, I mean, really, Greenland is administrated, I guess, by Denmark. Denmark's a joke. They can't even meet their NATO obligations. So he already had a discussion with them. Don Jr. flew in there. I think Trump's been up there too, if I'm not mistaken. And I think the, you know, Danish government was actually open to having discussions about this. And so Greenland is bringing this focus back to the Arctic because the Arctic, again, we have to compete there because that's where there's a tremendous amount of resources and energy resources. I mean, there's a, quadrillions amount of natural gas up there. Okay. And if you know anything about Russia, Russia has not been complacent. Russia has always been active in the Arctic because they share so much of their border with the Arctic. For example, um, there's many settlements, cities in the Arctic. Uh, I remember reading about a nuclear power plant that was built on a barge, and it's actually fueling one of the settlements or cities in the Arctic for heating and electricity. I mean, the Russians have, I think, now up to six or seven, maybe even eight nuclear powered icebreakers. They have dozens and dozens of icebreakers. The United States has five, I think. And so thinking about that new frontier, if we just sit on our laurels, which many previous administrations have done, this is an emerging place. And so Greenland is specifically situated to take advantage of that. So here's an article. Here's some clips from various articles that I was reading about this week. It says U.S. President-elect Donald Trump last week reiterated his interest in taking control of Greenland, a semi-autonomous territory of Denmark, which could be useful for the U.S. because of its strategic location and rich mineral resources. A 2023 survey showed that 25 of 34 minerals deemed critical raw materials by the European Commission were found in Greenland. Greenland's importance extends beyond its resource wealth. this person in the article noted the island occupies a key position along two potential Arctic shipping routes, the Northwest Passage and the Transpolar Sea Route. And as sea ice continues to melt, these routes could significantly reduce shipping times and bypass traditional choke points like the Suez and Panama canals. Then it goes on, it says Greenland is also home to Pituffik Space Base, formerly Thule Air Base, a critical U.S. military installation for missile early warning and space surveillance. The base's strategic value is compounded by Greenland's role in the so-called Greenland-Iceland-United Kingdom gap, a naval choke point in the North Atlantic. So again, the typical morons on the mainstream media just focus on the bombastic statements that Greenland or that Trump makes. But you have to look beyond that and say, is there an actual policy being articulated here? I'm not ready to say that, but there could be. And then what are the ramifications and opportunities around that? Because I can guarantee you Russia is not standing by, and neither is China on this. So here's a chart. Greenland's mineral resource potential, obviously along the coast, because this is all full of ice. It says while the country's inland is mostly covered by glaciers, assessments of its coastline show the potential for the extraction of several minerals. And then you see copper, diamonds, gold, graphite, iron ore, nickel, rare earths, titanium, vanadium, tungsten, uranium, and zinc. And they have different colors here. You can go around and see. There's actually, I think, some mining taking place. Right now, I think there's a ban on oil and gas development in Greenland, but for environmental reasons. Again, I do think there's a gold mine already active down here, and I think there's a rare earth mine somewhere up here that's active, but I'm not sure. But you see what the potential is. This has been totally unexploited, totally not, on the radar screen. And so if you look at a map of the Arctic Circle and where this is in the North Atlantic, you start to begin to understand why this is perspective. Okay. And so we'll see what happens. But I think with the other comments being made, like something's going on here. There may be a policy that we will see get articulated over time. Or it just might be Trump talking smack like he does. Difficult to say at this point. So this is a article that I suggest you read. I'll put it in the show notes. Alexander Dugin, he's a Russian writer, thinker, geopolitical analyst, philosopher. Obviously, you may not agree. He has a lot of skewed towards, obviously he's Russian, so he's going to take the Russian perspective. But I think he had a pretty good explanation in this recent article that he wrote, talking about Trump and the deep state and what's really going on here. And I think these two kind of paragraphs kind of encapsulate that. It's a long article. It's worth reading, in my view. I'll put a link to it in the show notes. It goes on here to say this, and it's, like I said, it's well worth reading and will, I think, stimulate some thinking. It said globalists expected the establishment of a world government as openly advocated by Klaus Schwab, Bill Gates, and George Soros. In this vision, all the world's people become global citizens with equal rights within a unified economic, technological, cultural, and social framework. Tools for this process, or the quote, Great Reset, unquote, included pandemics and environmental agendas. I think that that's actually true. I agree with this statement. And that's been derailed. You see the panic that's going on at the WEF right now. Everybody's jumping ship, and Klaus Schwab looks like he's in big, big distress. Like the globalist project is disintegrating as we speak. Goes on. For Trumpism, all of this is completely unacceptable. Instead, it advocates the preservation of nation states or their integration into civilizations, at least within the context of Western civilization, where the U.S. takes the lead. But this leadership no longer rests on the banner of liberal globalist ideology. Rather, it is based on Trumpism's values. This closely resembles Huntington's original argument for consolidating the West in opposition to other civilizations. Now do you begin to understand this, why we're talking about Greenland and the Panama Canal and having relationships with these governments in South America and why Malay is being supported by Trump, and we're talking about the Panama Canal. Okay, this is why. So again, I think that we are beginning to see this policy being articulated. Um, DEI, stick a fork in it. ESG, stick a fork in it. Globalism, stick a fork in it. Done, done, and done. Okay. And obviously there will be people that hang on because it's in their interest to do that, but they're done. And I think that, the focus of this particular administration is going to be on America and home. Okay. Uh, Trump, without a doubt, is not the kind of person that thinks it's a good idea. He's a builder, okay? He understands building, quality, upkeep of infrastructure. These are things he understands because he's been doing it his whole career. And he does understand when he sees dumpy airports and sewer systems, and like I've talked about before, the Society of Civil Engineers giving their annual report card of U.S. infrastructure D minus. He understands if we're going to have this AI and take the lead in nuclear power and AI and all these things, that we have to focus here instead of sending billions and billions of dollars overseas, okay, and getting ourselves involved. I said it last week. I give kudos to the warmongers and to the Israel lobby and their 20-year plan to remake the Middle East. They did it, with one exception, Iran. And so I think that Trump has to be careful, and I think he's more wise now and is surrounding himself with people that are going to help him with his agenda and not get sucked into the what happened in his last administration, where he really wasn't prepared to be president. He didn't understand how things worked there and how crooked and sleazy and the nefarious actors that are involved that are self-interested that were working against him. Okay. He's already fired people at the Department of Justice. They're firing people left and right. Okay. So I'm not saying it's going to work, but I think that there is a potential here for a total realignment of U.S. foreign policy, and it's going to be a more inward looking. That doesn't mean we're going to put up barriers necessarily, but I think it means that we're going to focus on the U.S. We're not going to involve ourselves in all these other things. That 25-year adventure in the Middle East and Iraq twice, Afghanistan, well, actually 40, 35, 40 years, all these things, all it did would give, we have a $36 trillion debt. Probably 20 to 25 trillion of that is our misadventures in the Middle East for our so-called ally there. And it didn't get us anything. It got a lot of guys uh, hurt and killed on our side, a lot of damaged psyches, and a lot of wasted money. That's all it did. Okay. And he has to be careful he doesn't get derailed into this Iran thing. Okay. Because they want to deal with this. They being our so-called ally wants to deal with this. And he cannot get sucked into that. The other thing is he has to be careful that he doesn't get sucked into what the Nixon administration got sucked into in Vietnam. That war was really ramped up under Lyndon Baines Johnson. It went off the rails. You can look this up. You could study the history. And then, the Nixon administration came in, and instead of just shutting the thing down, blaming it on the Democrats and Lyndon Baines Johnson, they tried to they did start negotiations with the North Vietnamese, but they tried to do things to motivate them to have leverage in the negotiations, stepping up bombings, moving into Laos and Cambodia, and all these things ended up backfiring. And Nixon got distracted by this. Again, the best thing that Trump can do is just wash his hands of this. You'll take 2 weeks or a month of bad press, and then we're out of it. Okay, this is Europe's problem. This is the Biden administration and previous governments in Europe wanted this. Okay, it didn't work. It's not going to work. We're not going to spend another $300 trillion and get, the time suck and the brain damage of trying to fix this. We'll be happy to get involved and negotiate a settlement, something like that. But, we got other priorities. And I think that it's too early to tell. There's a lot of conflicting information. For example, you see that they cut off foreign aid for 90 days, but did it apply to Ukraine? We're not sure. There's conflicting information. So that would definitely motivate the Ukrainians to negotiate with the Russians because they're completely dependent on the United States and the EU to keep that state alive and for military supplies. And in my opinion, if I was advising Trump, I'd say you got to get out of this. We have to focus on what our priorities are, which is make America great again, infrastructure, energy here, the living standards of our people, this immigration issue. These are our priorities, and we can't get distracted and get brain damage dealing with trying to clean up the mess from the previous administration. Just cut it off, wipe our hands of it, let the Europeans deal with it. And, governments there will fall too because they don't know what to do either. They are such vassals of the U.S. Again, you could say that we'll be happy to be involved in negotiations, facilitate negotiations, but we're done. It didn't work. We're out of it. And we have other priorities. This administration has other priorities. There'll be a lot of hollering, screaming, wailing, and gnashing of teeth of the military industrial congressional complex, but that's just the way it is. So we'll see if it happens or not. Again, I'll reserve judgment until we have, time will tell. All right, that's it for this week, guys. Appreciate it. Again, I'm raising the prices on the newsletter on Monday. So if you want to subscribe at the old yearly rate and lock that in for the next year, $179 per year. If you're on the fence, go ahead and do that. Raising it to $199 a year on Monday. And so please take advantage of save yourself a few bucks if you've been on the fence about whether to subscribe. There is a monthly option, but it costs substantially more. That price will also go up too, because we have people that just want to come in and try the newsletter and see what it's all about, and that gives you access. But you have to, I do charge more for the monthly rate because, people want to do drive-by views, and that's fine. But I would prefer that you subscribe for a year. I mean, if we had everybody just subscribing and unsubscribing, it would be hard to manage. So anyway, that's available for you. Again, we do have the free on Substack, the free weekly newsletter that goes out usually Monday or Tuesday. And that's just a curation of all the things that I'm looking at, podcasts I've listened to, articles I find interesting, what have you, that are particularly in line with the themes that we're discussing in these weekly videos. So that may be something you're interested in also. But again, the newsletter has the two portfolios in it. The AIA, the Actionable Intelligence Alert, portfolio, the core portfolio around trying to get capital gains. And then, of course, we have the dividend portfolio also. So if you're interested in that, I know there's a lot of competition for your eyeballs. I know there's a lot of people now. I mean, Substack is exploding. Everybody and his brother has a newsletter now. Everybody and his brother has a YouTube channel. Um, I'm grateful for the audience that I have. That's you guys. You guys have put your trust in me. A lot of you guys have been with me from the start. And so I do appreciate that. And the channel continues to grow. We're not always right, but we're confident that in what we talk about, that we've done the requisite, uh, uh, you know, research, and that we can put forth a good argument. So that's it for this week. We'll talk to you next week. Thanks.